Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, February 2nd, 5:23 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market in an uptrend, still showing caution. Another up day, big up day for the NASDAQ 100, but down 1.5% after hours as Amazon, Apple, and Google are giving back some of their gains over the past couple of days. We'll sort it all out tomorrow. Tomorrow when we see uh, the overnight and into tomorrow reaction after the conference calls, and also the reaction to the jobs report Friday morning before the open. You can see over here on the trend gauge, we're showing bullish for market leadership. Short term, meaning all five of the major indexes are trending above their 21-day moving average, also above their medium term 50-day moving average, also above their 200-day moving average, but still need the slope of the line to turn back up on all five of the indexes before we can get to the green arrow, the coveted green arrow. So what happened today? Big positive response to Meta, formerly the artist formerly known as Facebook. Uh, to their Wednesday night earnings, Meta up 23% today. That sparked the Nasdaq 100 and pretty much all social media ad-driven stocks to a big gapped up 2.4%, ended up 3.6% on the day. But then after hours, as I mentioned, the big three giving some of that back, but still at this point only giving back half, not even half of that gain today. G6 on the day up 2.1%, S&P 500 up 1.47, Nasdaq 100 up 3.6, down negative, down 0.11. Mid caps up 1.16, small cap Russell up 2.06. Global diversified 60/40 stock and bond up 0.68%. GROTECTION, the laggard, well, not compared to the Dow, but certainly compared to 60/40, up 0.30%. Four of our positions significantly underperformed today. So money coming out of those, we, as a result, trim them. And we'll talk about that when we get to the tail of the tape and review the charts. Excuse me. So let's get right in to it. Revere Asset Management, active management. Our goal is to keep you out of severe bear markets and then participate in uptrends when the market becomes healthy. There's usually a lag from when we come off the bottom and start participating in the uptrend, very typical as we're going from an all in cash to working our way into a position where we're trying to keep pace and then outperform the indexes. Why do we pay so much attention to this? Well, we spent most of 2022 under this black line, the 200-day moving average. It's when you're under that line that all of these bear markets take place, usually from top to bottom, from the high until you break the 200-day on a weekly basis. It's about a 12% drawdown. The difference between these numbers and 12% is the amount you can save by focusing on the active management rules that we talk about in all of our videos here. And then when the market starts flashing short-term buy signals, we get back in. The shortest term we use is a big positive reversal off of a failed undercut like we saw on 1013. The second one is a move back above the green line, that's the 21-day moving average. The third one is a move back above the red line, the 50-day moving average, and then finally a move back above the black line, the 200-day moving average. And the entire time we're gauging the strength of leadership in this rally. In this month, the beginning of this year by far has been the strongest from a leadership perspective. All of these rallies, the prior to July off the lows and October off the lows were led by low quality stocks, and it was really just some junk off the bottom and some stocks trying to reclaim and start the right sides of their bases and put in bottoming bases. And that sets the groundwork for the next crop of leaders. And there have been quite a few leaders coming out of nowhere, stocks you'd never heard of before over the last 5 weeks, really making names for themselves up strong, as well as comeback of some liquid leaders that are making higher highs after going sideways, putting in their bottoming bases over the last couple of months of the year. And if you're interested in this approach, keep out of trouble, re-engage the market when it's back in a healthy posture. Reach out to us. You can email me, don@revereasset.com, or my partner, Dan Stewart, dan@revereasset.com. He handles all onboarding. Or you can call us at 855 Real Wealth. That's 855 732 5932. We'll be recording our podcast Friday morning. It'll be on YouTube Friday afternoon. It'll be released via email Saturday morning. And then Friday night, we will have the updated 21 over 21 leaders list. The strength in the leaders list is really what the early sign was that this rally might be a little bit more than just a knee jerk pull to the upside. The leaders held up while we had 3 attempted sell offs since January 15th. And that's why they follow the leaders. And that's why we follow the leaders. And some of them moved extremely fast. We were able to get in some of them, but not the size position that we want to. So this pullback after hours today is hopefully the pause that refreshes, brings some of these back to uh, more lower risk entry points. And that's what we'll be looking for tomorrow and into next week. So there's the S&P 500. Let's take a look at a quick intraday. We gapped up, opened around 40.60, 20-point pullback, 40-point rally, sideways breakout. This breakout ran into 41.99, which is a big fib level, and also 1 point shy of the round 4,200. 4,200 was a resistance area on an attempted rally back here in August. So you look left, we always are drawing these horizontal lines looking left to tell us where the resistance pops in at. So normally it's normal to pause at that level. Quick 1.2% pullback here between 2 o'clock and 3 o'clock, but that's it. 41.45. We rally up to 41.80 at the close, 35 points, give back 1.2%, recover 0.75%. And after hours, the SPY down about 0.7% now. But the S&P holding that 4150 level. That's kind of a level that's been established over the last 2 days. It was the high where we reversed after the Fed. It was 4141 was the low of this morning, and 41.45 the low of the afternoon, pulling back around this 41.50, 41.40, 41.50 area after hours. We'd like to see that hold as short-term support, see the moving averages catch up as we are stretched from the short-term moving averages. 5.7% from the 50-day, 4.3% from the 21-day. You normally don't get stretched. You have to now. It's different when the slope of the line is still pulling back and flattening out. It's very common on knee-jerk reactions to get extended 7-8% above the 50-day moving average. We've now been trending higher for nearly 50 days now, and 5.7% is a pretty significant stretch. So we really do need to pull back a little bit. Ideally, worst case 4100 is what should hold, because that was the breakout area from resistance from 12.1, resistance from mid-December, resistance from Friday of last week, finally busting through it after the Fed yesterday. 4100 would be a very normal pullback spot. By then, the 21 will start catching up, and the 50 and the 80 MA, which is all the way up to 4078 already. Normal spot for the averages to pull back to reload and address some of the leadership. Remember, the strength is revealed in the pullback, and weakness and laggards can certainly be revealed in rallies, and we found that out in some things in our portfolio yesterday and today. We cut them, and we'll be focusing that money on things that are outperforming. So there's the S&P 500. Let's get to the Nasdaq 100. Uh, you see the big move, the big gap up, closed up 3.59%, up over 4% at the high of the day. After hours now down 1.5%. Possible gap fill, but that would be quite a ways down. But we'll see how we react tomorrow. Very clearly leading is what the Nasdaq 100 is doing, and very clearly lagging is what the Dow Jones Industrial Average. This is not sustainable to the downside, just like this leading on the way up was not sustainable back in September and October. These things tend to trade. They pass a baton like a relay team. Wouldn't be surprised to see the Qs pull back a little bit and some just absolutely beaten down value or quote unquote safe growth stocks like Boeing underperforming over the last 2 weeks. Maybe they get the leadership role again, or then again, maybe they don't. That's why we're constantly testing the relative strength of various sectors, starting with the major indexes, going on to the 12 major sectors of the S&P 500, and then down to the 33 sectors that IBD tracks, and then the 190 plus industry groups. They say there's 197. There's actually not. There's just some blank spaces in there. It's like 192 is what we come up with. But this huge sell-off in the Dow isn't sustainable, and you can see we're holding while the relative strength keeps going down. Price keeps holding this 21-day and 50-day moving average, which are flattening out. Let's go to mid caps. MDY 1.1% today, pushing into 500. Seems like just yesterday we were talking about this big resistance level at 450. Boom, 3 weeks. Nice move up off there. And IWM running into 200, coming back into resistance from last August, also showing relative strength this week. Let's go to RSP was weak today. As long as these big cap techs are leading the equal weighted index when indexes while they're making headway, and higher highs are lagging slightly on a relative basis versus the S&P 500. Nasdaq 100 equal weight up 2.17% today versus 3.6% on the Nasdaq 100. So outperforming versus the S&P, but lagging versus the Nasdaq 100. Let's go to the dollar, and this is what hit gold, silver, and gold and silver stocks today. Take a look at this 5-minute chart on the dollar. The big sell-off, and this big sell-off, this broke down a key level. Recent lows here of the equivalent of 27.35, 27.30-ish, but reclaim that today. So possibly a false breakdown for the dollar here. If that's a false breakdown for the dollar, you might see a bigger correction in precious metals and precious metal stocks, and some headwinds for the overall market, which really didn't pay attention at all to the stronger dollar today. But gold and silver stocks, as you can see here, the gap up continued higher. GDX gave back quite a bit, really didn't uh, do much while we pulled back, and then just went sideways into the close. We're going to fast forward here to GLD, GDX, and SLV to look at these performers. Uh, yeah, that's awful. So there's gold. It has been leading for a while. Did it just go too far too fast? No, well, right now that's a failed breakout for gold. Uh, Relative to the prior high of the prior week, still trending above the 21-day, so maybe something, maybe nothing. Stochastic finally breaking through lower from overbought. So definitely something to pay attention to. Let's go back to the 5-minute and look at the GDX. We bought GDX in here on that dollar breakdown and GDX breakout. It gave back all of the afternoon gains and then some more, making lower lows and lower highs all day. We went from a 2% up to 6% yesterday, cut that back to 3% today. on this uncharacteristic behavior. Bounced at the 21 just like we wanted it to, undercut but closed right on the 21 on higher volume today. Don't like to see that. And the stochastic uh, hooked up yesterday, hooked back lower today. So risk reward not as favorable as when you had the bounce off the 21 that we saw. Let's go to silver. Early on, silver was made a higher high and then just sold off dramatically, and basically closed where it was yesterday when the Fed announcement came out. So gold, let's put where we are relative to the Fed. Gold lower, gold stocks lower, but not by much. A little bit of a rally here toward the end of the day, and then the dollar was here just slightly below where the Fed where we were when the Fed announcement came out, poked its head above it briefly, and then sideways into the close. So that correlation definitely worth paying attention to. Let's flip to bonds now. Broad bond index. So let's keep it on this 5 minute. As you can see here, how we followed through to the upside in bond prices, meaning yields fell, although we did close at the lower end of the day. So basically, right where we closed after the Fed announcement, uh, barely up 0.07%. That's the broad bond index. Let's put it on a daily. You can see a move off the 200-day moving average here, but again, reversal off of the highs. LQD is corporate bonds. LQD. Again, a reversal. Let's put it on the 5 minute and compare it. Really the same action, closed where we closed yesterday after the gap up. Faded junk bonds, still above, just like stocks, still above where we closed at the end of Fed day. And TLT, the big 30-year, gapped up and sideways faded, basically where we closed yesterday. So bonds up, not up much today. That means not expecting to see a big move in rates. Here's TNX, bounced at the 200-day moving average and finished basically unclosed or unchanged. And TYX, 30-year, bounced right above the 200-day moving average and closed slightly positive on the day. Did we cover everything? We didn't cover Bitcoin BITO, about 1% on the day. Tried to break out of this recent range, but not yet, not quite yet. So those are the major indexes and that we always track, and sectors. Let's get to the tail of the tape, seeing if we can get rid of this caution tomorrow, depending on how we behave. VIX was up today. Uh, it was down quite a bit. Actually, I didn't even look at those charts. Did I? Zero VIX. Bring that up. Spent the whole day below the 21-day moving average, but quite a bit. It made lower lows, just like the market made higher highs, and then rallied before the market even started pulling back. And that was, remember, the 2 o'clock was where we started pulling back on the indexes. That corresponded with a big pop up in the VIX, although it was trending higher. This is basically saying, yeah, we're getting a little too extended. Oh, and after hours, we've got three big names, the three biggest heavyweights in the big indexes reporting. So maybe time to buy some puts. So there's the VIX, still trending below the 21-day moving average. Okay, what happened here? Here we go. So last thing we want to watch, jobs report tomorrow. But we're on the bull case. I pretty much summed up the news. Day count from up 2 to up 3, 8 EMA and 21 EMA, 10th day above those. So yeah, we're getting a little long in the tooth and stretched. 19 days since the follow through day on 1/6. Expectations positive coming into today after yesterday's reaction. We made 5-month highs. We exceeded. I didn't update this. I need to. I will for tomorrow. We came into that next 4,200 resistance area and there's a corresponding one to the Q. I'll have to get that updated. So you see the action with the base, the failed breakdown, rally into the close, down after hours. Indexes, builders continue to act well. CKY, those are the tech indexes, and real estate XLRE up 2.3%. Retail XRT up 3%. Transports also, I didn't have enough room to fit it, up over 3% also, as well as JETS, Jets. Yields and bond prices, like I said, they vacillated during the day, from bond prices being up quite a bit to pulling back, and rates being down and coming back. Bad day for oils today. Bad day for basic materials, staples, and healthcare. KWeb also down 2%. Gold, silver, and gold and silver stocks, and PIC, which was a recent winner for the miners, down 2.4% today. We'll go through the portfolio and select tickers. Changes in the portfolio today: we added to Bros, added to XBI, sold First Solar. These are the weak ones. We trimmed what was weak and what was lagging. First Solar, OIH, and GDX, and we'll go through them all when we go through the focus list here in a second. Bottom line, Metaspark's big tech rally, Apple, Amazon, Google pulling back after hours, also bringing the NASDAQ 100 back with it. 41.99 on the upside of the S&P is the next level that needs to be overcome. On the downside, we want to hold this 4100 area. So let's get to the focus list now, starting off with the portfolio, and we'll start off with the ETFs. XBI, good day today. We added to it as it broke out, closed at the top of its range. So this up to an 8% position now. GDX took it up to 6% yesterday, down to 3% today with this big negative reversal, although it did close on the 21. OIH, pullbacks always held the 21 until today, so that's a character change. Relative strength not doing what it should do. We cut this from 4% to 2%. Next up is we sold First Solar. First Solar got a downgrade this morning and then rallied off the downgrade. When you see this initially, you're like, yeah, good stuff. And then it started to pull back hard, and then it really started to pull back hard in the afternoon. So closing below the 21, we got rid of that, sold it for basically break even after being up maybe 10% on it at one point. That's a little more than I like to give back, but I don't just like to. I don't know. It's always something that I've battled with, just setting an arbitrary level that something pulls back with that is normal, a normal part of the pullback, instead of giving it the benefit of the doubt because it bounced so many times near the 21. But going from plus 10 to 0 sucks, to put it mildly. Number 4 that lagged for us today, Boeing. Let's look at the 5-minute chart on here. Basically, this is a failed breakout right now. We took it up from 6% to 8% early Wednesday morning. Big volume, breakout, pulled back immediately, tried to break out again in the afternoon, sold off. Not so bad there. Yesterday's close, still above the ADMA. If something's above the ADMA, there's absolutely nothing wrong with it, although you don't like to see a failed breakout. But today, just a complete laggard, down 2.52%. Weak all day relative to the market, and this just from 214 to 208, brutal. It bounced. We sold a little bit on the bounce, so we took it from 8% down to 4%, long as it holds the 21. But there's a lesson in here, and I know this lesson. And it's another thing that is very nuanced. When something is forming the equivalent of like a 3 weeks tight, it's normal to see the relative strength line lag. But as soon as it breaks out or attempts to get back up through there, you need to see the relative strength making a similar type move. And that's what was missing yesterday. And once it gave it up, again, still above the 8, so no reason to ditch what we just bought. But today, serious relative weakness relative to, look at the relative strength line relative to where the price is, and worse, look at what the market's doing. So I always write down where the S&P 500 was when I buy something. I want to be doing twice what the S&P is, and certainly don't want to be doing worse than the S&P. But that was the case with the ad yesterday. It was also the case with the third buy that we did here, and the other two buys are slightly lagging the S&P. So we ran this. We participated in this nice run up, and it just may be that this is that defensive growth that's lagging along with the Dow. And if money's not flowing here, we're not going to waste our time waiting for it to. That's why we sold half of it today. All right, moving on to some things that are working. Shopify, uh, high teens gains with this, but not a big enough size to offset some of the downside today. You can see it's got the plus 21 from the breakout. That's power from the pivot. It's extended, can't add to it at this point at all. Tesla, another big leader. Uh, Higher highs. Should have added to this yesterday in the strength in the afternoon, but it was moved so fast, and we had those two big down slides lower before we added, and then we focused on GDX adding when the dollar broke down. But uh, in hindsight, of course, is hindsight's always 2020. So Tesla should have been added to along with Shop yesterday while we were adding to GDX. Bros, we added 1% to this today. This continues to work. Got above the 40 level. A lot of resistance here in this 40 level, so really needs to hold it. Volume patterns positive, and this is what you need to see in the relative strength line, confirming the move in price. So good stuff there, and Bros are up to 3% on that now. AEHR, this is on the thin side, so we've got a small position in this, up 6.3%. Loving that. DT, also a small position in this with the gap up yesterday. The gap followed through to the upside today, just like you want it to. Acting great. And TMDX, another one we've got a small position in, up today. This undercut, 2 days of the undercut of the 21 and reclaimed it actually all three times. Well, two times. One mild close below it, but the volume came in 2 days later to recapture it and back up near highs. In addition to that, we have 30% equivalent in the S&P 500 via indexed ETFs. Now let's look at the big stocks and what they did today. There's Meta, up 409% volume, up 23%, and the numbers sucked. Down 52% in earnings, down 4% in sales, but they're cutting their expenses. PE all the way down to 18, and earnings 25% growth next year, not this year, next year. So people are kind of trying to front run this. Let's see what happens as this approaches 200, and let's see if it holds the lows of today of the gap. After hours, it's still at 187. So really holding up well with and Apple now is back even after hours, and Amazon is only down a buck, and Google is down $3. So I guess the conference calls are going pretty well after hours, and that's why Meta's not really giving anything back. So good stuff there. Meta, a leader with volume. The gap rules will apply to this just like we do everything else. Elf, Elf stopped out here on the move below the 50 and the 21. And didn't re-enter. Gap up on earnings, up 15% on big volume. We'll apply the gap rules to it, and once our wash sale is over for taxable accounts, we'll look at getting back into that again. Align, another one, big gap up today. ALGN up 27% on 358% volume. Let's look at a weekly for some context on this. This is a former big leader, pulled back. You're seeing a lot of this now. The Weinstein stage 2, putting in the bottoming base, that's stage 1, breaking back above the 150-day moving average or the 30-week, that's stage 2. And then after hours, here's Apple. You can see Apple reclaimed the 200-day. Went out at 150. It's now trading right at 150. Well, it went out closer to 151. So holding the 200-day. on this pullback. Let's see what happens overnight and pre-market and throughout the day tomorrow. Plus, we've got the jobs report, and then Amazon. Amazon started to establish itself here on this big volume update through the 50-day moving average, up 7.3% today. Closed at 113. It's at 111 now. The 200-day moving average is at 112, so hanging right around that 200-day moving average. And then finally, Google got a big boost from Meta. There's the big gap, up 7%. The low of the day was 105. It's below that right now. It's at 104 30. Don't didn't haven't heard any details on the earnings reports to see what's going on, but all three of these back above the 200-day moving average plus Meta. That's what you want to see. That's leadership, and that with their heavy weights, they carry the indexes a long way, and that's going to wrap it. As always, love to hear from you. The email is don@revereasset.com. The phone is 855 Real Wealth. Remember, it's not how much you make in the market, it's how much you keep. We're not always right, but we're always going to be, when we're wrong, we're going to be wrong small, cutting our losses between 0.1 and 0.2% versus the overall portfolio. That's how we establish our position sizes. Uh, Going to kick that up a little bit now that we've been using 0.1 as our on these 1/4% entries that we're doing, but market healthy calls for bigger starting positions or immediate pyramids, even if oversold on or overbought on short-term stochastic. So different tactics for different markets. One day I'll review that during one of these videos. I'll bring up the sheet, the 3 columns that compares how we use different strategies and tactics in different markets. But remember, it's not how much you make; it's how much of that you can keep. Market helping us out to the upside. It's now our job to participate with it. And with that, I'm going to wrap up Thursday, February 2nd. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening. Have a great day.